Thank you very much for coming. This is the breakout session, Inclusive Prosperity in Central and Eastern Europe and Emerging Markets. I will add that we will focus predominantly on Eastern Europe, since the panel, all four of us, people who have done substantial business in Eastern Europe, and I think the way we want to introduce this subject to you is very much along our experiences in Central and Eastern Europe. If I introduce my colleague Jean-Noel Fourel, French, lives in Austria, works for a Polish company, which tells you already a little bit about how we cooperate in this region, has been with automotive supply companies. Oops.
It was too early.
We were extra on time, and is now running a, again, as I said, Polish company in the construction supply business. Stefan Zapotocky is our finance man, Austrian, who has worked for a number of Austrian banks, has then run, that's when I met him, the Austrian Stock Exchange for many years, and is now with Sberbank. And Jean-Marie Penven, also French, but now focused on the Czech Republic, working for an electronics company in the automotive field, which has been very acquisitive in the Eastern European market, and we'll talk a little bit about his experiences from that end. Myself, I'm Andreas Ludwig. I am executive chairman of a private-held Austrian company called Umdasch. We have two businesses. Our largest business is a construction supply formworks business. We have been in the Eastern European countries for many, many years, even before the political changes 20 years ago, and have done very well there. Central and Eastern Europe was touted 20 years ago after the change as the new Europe, and has somewhat not be as dominant in the news and in the focus as it has been originally, and therefore we said, let's talk a little bit about if we look at the facts, we really stand in the development in Eastern Europe. GDP per capita in Eastern Europe, even after 20 years after the revolution, if you will, is still significantly below the European GDPs. I looked at the numbers, and you, I guess, could group the Eastern European countries in the Central European countries of Poland, Czech, Hungary, Slovakia, and Slovenia, where the GDP per capita is roughly between 50 and 70% of the rest of the EU. Then the Southeastern European countries, Romania, Bulgaria, where the GDP per capita is significantly still lower, more in the range of 30 to 40% of Eastern Europe, and then of course the bloc around Russia and Ukraine. I think what's interesting to note is that the expectation is that during the next decade, no country in Eastern Europe and Central Eastern Europe will catch up with the average GDP of the 28 European countries. So there's still a big gap, which in a way still makes those countries very competitive from a business point of view. I can report from our own experience. We recently bought, 18 months ago, a shop fitting business in the Czech Republic, and our average wage cost there is about a quarter from what it is here in Austria. So there's still a significant difference, and I always say this is a 3-hour drive from here in terms of wage differential, and therefore very competitive manufacturing. Yet the biggest problem we have there, and we have doubled our business in the last 18 months, is I can't find any people to work there. Very low wages, but very limited human resources, as unemployment in the Czech Republic, I think we'll hear about it, is somewhere between 3 and 3.5%, which is basically no unemployment. So I think if we talk about inclusive prosperity, I think all the opportunities are there for the Central Eastern European countries. But what I hope we will be able to focus in our discussion is what are the challenges for those countries to really harvest those. Jean-Noel, can you maybe start us off with your experiences going into those markets?
So, I mean, first, I am more the half full glass than the half empty glass type of character. And yet, it's true that those countries don't reach the average of Europe yet. But if you look at the speed of catching up, it's very impressive. And in the past 10 years, when the average Europe grew by 2 or 3%, all these countries grew 6-7%. So the catch-up is very significant. So this is what we can observe. And I have been doing business in these countries since it opened, you know, when I was in different companies. When we first bought, companies like in Hungary, where we would find 700-800 people doing the same thing, like we would do with 100 people in France, you know. So the first phase was to really adapt the technology, right size the operation. So that was the first phase that I have been going through, you know. And then over the years, I have been doing businesses, and what was impressive was the speed where it was possible. So that is my experience. So people wanted to adapt very quickly. So that's the first thing. Second, in other companies in building material, I have seen the phase of investment, and a lot of companies, including Austrian companies, French or whatever, invested a lot to catch up, because all these countries wanted to rebuild the countries, basically, you know. So that created a lot of opportunities with the latest and greatest technologies. So it has helped to build a very good base of people and everything. And my experience is that there is absolutely no difference in terms of competencies. In my previous company, we had factories around the world, and the best guy, the best plant manager was a Polish guy, and I made him the international industrial manager for both R&D and all of manufacturing, because he was obviously, and with no reason, with no question, the best guy in the group, with the best performance, and always finding the solution with the most savvy, the most lean solution. So this is a great help, you know. So I am quite convinced of this, convergence, which is happening. And coming from West Europe, it's always better to develop with a neighbor than with a far-away guy, because the neighbor will ultimately buy our product and come and spend his holiday in our country. So we exchange, you know. So I think it's a very virtuous circle to expand like that, you know, by coalescence. And I think so I have only positive experience. And yes, we are missing people. This unemployment, my company is in South Silesia, it's the same thing like in Czech Republic, 3% unemployment, very difficult to have people. This year I had an emergency to increase the salaries of every worker in emergency, because we are losing people. But we find good people. Problem is to keep them.
Stefan, from your point of view, I think maybe looking a little bit further east.
Okay, yes. I'm Stefan Zapotocky. I work now for 43 years in the Central European markets, starting in Austrian banks, Sberbank and Bank Austria. My first experience with our neighboring Eastern countries and farther Eastern countries was in '89, when we created the first brokerage companies in Czech Republic and Hungary. And this was a very interesting experience. My father comes from Czech Republic, so I'm really Eastern European. Family comes from Galicia, now Lemberg, Ukraine. And so my heart is really in this region. My biggest, success in this region was the creating of the Central European Stock Exchange Group in 2004. I was the CEO of the Austrian Stock Exchange, and we boosted the market in those 6 years from 30 to 150 billion euro capitalization in Austria. Why? because of privatization and the enormous potential for Austrian companies in the Eastern market. So the income of a lot of Austrian companies, and I think you are one of those, is really depending a lot from success in the East. I'm now the corporate banker for Sberbank Europe Group. Sberbank is the largest Russian bank, you know, with more than 400 billion of assets, $10 billion income net, 60 billion capitalization, so nearby double as much as Deutsche Bank, but unfortunately Deutsche Bank is a little bit weak at the moment. But it is unknown. It is unknown because of the sanctions we have. And I am of the strong opinion, if we want to create real welfare and a strong economy in all the Eastern countries we have around our country here in Austria, Europe definitely needs a new approach to Russia and Ukraine. And I hope very much that the new governments in France, with a very strong president, and governments in Germany, and after the Brexit probably the situation is different, we need a new and stronger partnership between Europe and Russia, and of course including the other countries. And this is my message, and I work for this. We have 8 banks in these regions. We are the holding here in Vienna, and my most important mission is to create welfare and peace and wealthy income in this region through financing the companies between here and Russia. Thank you.
Jean-Noel?
Okay. Then, like say Andrea at the beginning, I'm French, half African, half French, and I will speak about Czech Republic. What is quite strange at the beginning, but it will be through my story in Czech Republic that I will explain you the 3 waves that I saw in the past year in Czech Republic that lead today to what I can tell that it is the inclusive growth and prosperity in Czech Republic today. Then in 2002, like a young engineer, I arrived in Czech Republic. My target was to develop a new manufacturing in Czech Republic for a French company. The first the thing that was very surprising when you arrive in Czech Republic at this time, there was no infrastructure, quite little. There was some highway, but not so developed. And this was one of the things that was a little bit slowing down the business. For example, when you come at the border from Germany to Czech Republic, there was roughly 7 to 10 kilometers of truck waiting from the custom control before to come inside Czech Republic. Then when I arrived in the factory, there was a very skilled people, a lot of technical background. The Czech people have a lot of good engineering skill. What was missing was the management skill. It was still what we can call the old communist way of managing the factory. For example, one very interesting example. One of my first problems was the absence of worker due to illness. When I arrived in the factory, it was 20% of the worker was absent due to illness. And for a French guy, when you have more than 5%, it's something incredible. Then I take the Czech management, I explain them, okay, this is not acceptable. And they look at me and they say, but why you care? They are at home, they are paid by the state. There is no problem for us. And it was a little bit for me also okay, I need to understand why they don't care. Then I start to explain them. Then at the end they understand, and we start to move forward. Another difficult point was there was not enough supplier base in order to develop the business. Then the French company that I was working for invest a lot in the local base of supplier. We develop it, some supplier, some small entrepreneur in Czech Republic. They build their factory because we give them some contract or 3 to 5 years. Then we develop the base. Then this was this first wave that I call the catch-up, and it's in 2004. It was I can say the momentum from Czech Republic because it's entered in European Union. Then, in one moment, you don't have anymore this truck that is waiting at the border. The good can travel everywhere. We start to be able to sell our product to England, to France, to also in China. It was really the good time for the Czech Republic. Then came the second wave, and it was what I called this wave. I call it the disruption. And this, I think, follow me, you will remember some of the things you will not remember, but this has a lot of consequences after for the situation that we are today. 2008, then you have the crisis that hit all the industry in Czech Republic. 2010, you have the famous volcano, if you remember. There was this Iceland volcano. It looks strange that I link it with the business, but you will see after. 2011, you have the Arab Spring. And 2011, 2012, beginning of, in the news, you start to hear the Chinese company are starting to increase the wage of their worker. What happened after this is that a lot of company, of my customer, start to understand that, okay, it's nice to have a factory everywhere in the world, to have a factory in China to compete against Czech Republic with a factory in China, to have some factory in Tunisia. But now, when in this area you have some economical situation, it impacts your market in Europe. The volcano, for example, has stopped the supply chain during 1 or 2 weeks. It was very difficult to manufacture and to deliver our goods due to the fact that some good wasn't able to come inside Europe due to the volcano. Then we start to see at the end of 2010, 2012, relocalization of some customers. They start to come back in Czech Republic. And even my company, that is today a Filipinos company, they start to invest massively in Europe. We have 2 factories, one in Czech Republic, one in Bulgaria. And we are opening another factory also in Serbia. And we bought last 12 months 3 companies. And we bought again 2 other companies in the next 12 months. Then a lot of foreign companies saw this potential in Central Europe, because at the same moment when the economy was starting to catch up, there was this wave that we have today in Czech, that is the booming. That in 2012, the central bank in Czech Republic, they fixed the exchange rate between the Czech koruna and the euro. They reduced the interest rate, a very, very low interest rate. Then there was a huge boom of investment. You have companies like Amazon that opened some up center in Czech Republic. You have some big investment of a Japanese company that came in Czech Republic. And then this led to the situation that we are today. And when I make the conclusion of this 15 years, the GDP increased by roughly 135% between 2002 and 2015. The minimum wage in Czech Republic increased by 168% between 2002 and 2012. The consumption of the household consumption increased of 30%. And today, if you come to Czech Republic and you want to see if the people have a benefit to this prosperity, in the place where I live, it is Pilsen area, the unemployment is 2.5%. Even my father-in-law, that is in retirement, people are coming to his home to ask him if he don't want to work because there is not enough worker. The economy is really booming. And it's incredible to see. And if you see then after with little bit background, say, okay, what did the Czech Republic and what can do the other country in Central Europe? I think that first of all, they focused at the beginning on the infrastructure in order to develop the infrastructure. They have the benefit that they have a good educated people in terms of engineering that help a lot for the manufacturing. And after, clever economical policy. And very stable business environment. Even if you see the politician in Czech Republic change a lot, but the central bank is very independent, and they succeed to maintain a very stable policy that made that the business is easy to make in Czech Republic. And you have sometimes some event like the disruption, volcano, crisis. But when your economy is strong and you have a good basic of the law for the business, the country can sustain. And I believe that the other country in Europe, what I see in Poland, in Slovakia, they are also in the same level. And I believe in the next year, the next 5 to 10 years, the Central Europe will be a very interesting hub for the business, because you are not far from the richest country in Europe, Germany, France, Italy. And you are still in area where the cost is low and the business is easy to do. Thank you.
Thank you. I think obviously it's not only your company. I found the statistics that 2016 was the record year of M&A transaction into Central and Eastern Europe, and about 90 billion euros. One thing which I find quite interesting is if you look into that, it's a lot of that is now also coming from China. We have seen a huge focus of Chinese investors who have started moving into Central Eastern Europe. I think you mentioned the Chinese in the Czech Republic. Alibaba is building a 70,000 square meter distribution center near Prague.
Yeah.
So the Chinese are investing. I don't know, Stefan, is there, from your point?
Yes.
Do you see that also from the bank's point of view?
We attended a big conference recently in Beijing and Singapore and other districts in the Far East. It is really amazing how fast Chinese are moving, much faster than every other investor nation, so to say. And even in Austria, there is more or less more interest from Chinese investors than from others. This is really interesting. So for machine industry, for trading companies, also for banks, you know, Bank of China has opened now in Vienna. And it is amazing, and I have really to say, we need a balance between the interests of the very Far East, like China, and the other countries. And that's the reason why I'm the fond about the idea that we should create a better cooperation with Russia and Ukraine again. So in my opinion, you already have featured out probably three groups of countries in Central and Eastern Europe, including Austria. Yes, I see Austria also to some extent part of this, so to say, Central European region, of course, just from history. So Poland, Czech and Slovakia are still definitely the best and strongest developed countries already. The per capita income, Andreas already has said something about this, will speed up in the next years. We have other countries which are, so to say, improving, which is Hungary, Slovenia. Unfortunately, in Croatia, we have a very unsecure, unsafe situation on the, let's say, legal basis. There are a lot of disputes between Western European banks and the government at the moment, huge disputes about billions of euros. So we need two ways, of course, to overcome this situation in the developing country. This is education, first of all. This is investment from other groups. And this is, of course, a very stable legal system. And this is at the moment, even in European Union countries of the East, not every time the case. That's the reason why investments are, to some extent, not easy. The other part of the companies, we should not forget about the, so to say, the tigers in the north, the Baltic countries, which are very strongly now in terms of Lithuania has an average increase of GDP of 3.9% for the next years, and it has reached even now in average 4%. So the real question mark is now the situation between Belarus, Weißrussland, Ukraine and Russia. And I think especially countries like Romania and Bulgaria depend a lot about the economic situation of their neighbors. And I hope that we see the time coming where we really have new and strong markets in this region of Europe, not only depending on the big investments which come from the Far East, which are very welcome, I have to say. It's not so that we should be against, but I hope that we have also the opportunity to diversify. Austria was one of the leading investors together with Germany, France, of course, and Italy. And I think the markets are again open now due to this very favorable growth situation which we experience now the third time after '89. You know, there have been 3 moves, more or less, after the opening. Then first crisis around 2000, second crisis around 2009, and now again a very prosperous situation. And let's hope that the countries are open for international investment.
What, in a recent Financial Times article, I read that Eastern Europe is set to become one of the front runners and forerunners in the fourth industrial revolution. There's a lot of initiative going into the tech scene, investments there. Is that something you experience?
In the tech scene, yes, and I mean more broadly in the R&D.
Yeah.
Because I think the people have exactly the same education, the same level like anywhere else in Europe, you know. And you underline that the cost of people are quite lower. So it's a very smart move to invest in R&D in those countries, in highly intense R&D industries, for instance. You mentioned high-tech, but not only. In my company in Selena, in building chemicals, we create a distinctive advantage by investing more in R&D for chemical products, because we can develop more formulas for the same money than our competitors from Western Europe or USA, for instance. And with that, we grow with international success. And I think this is a good advantage. Second, the European policies are supporting that, because you know that there are some European projects funded by European Union, with which those countries are leveraging quite well, and the rate of financing is higher for Eastern European countries than for Western European countries. And I think this is a good thing to make this inclusive prosperity, is to speed up and to count on those things. And there are some new champions. It's not only a place where Western countries will invest, but also where companies born into these territories will also be able to deploy themselves around the world. So in high-tech, for instance, in IT, I'm sure, because I have seen some articles I read, but in many other industries, and I see in the chemical industry, they are very relevant, for instance. And I would like to mention a book that I have here, because there are also in the academic thing some interesting steps being made. And for instance, I have a book that I could recommend, you know, which is called Entrepreneurial Icebreakers, which explain 15 cases of different companies born in Eastern Europe and growing around the world. And my company is part of it. This is why I am more knowledgeable about that. And we have also the chance to have one of the authors in the room. So Sylvia, you can maybe refer to that. So this is interesting to see that we should see those countries not only as a market where to invest, but also to accept the fact that some of these companies will take their place in the world.
I think if I can comment the Industry 4.0 for Central Europe, it is vital, not just for the buzzy word that you hear in the media, but today, like say Jean-Noel at the beginning, we are missing. If we want to continue this growth, we are missing people. There is not enough labor force due to a lot of phenomena. The young people don't want to work in manufacturing. It's if you ask to a young guy that has finished his school, do you want to spend 20 years of your life in an assembly line? You don't have a lot of people in the room that will raise their hand. It's not very interesting. Then you need to find some way in order to replace the worker, not only to make an economical saving, but just because if you don't have a solution, you will not produce. Today, if you don't have a solution, you will not produce. You cannot anymore, like in the past, when in 2000 and before 2008, there was a growth also, but there was still possible to hire people from outside, from Ukraine, for example, quite easy to make them come to work in Czech Republic. But today, due to the situation that you know in Europe, a lot of countries have closed their border, and it's very difficult to, from immigration outside of Europe to come to work in Europe. Then the Industry 4.0, just forget about the buzzword, but focus on changing your manufacturing process, just in order to be able to continue to grow your company. And what is interesting also in this new technology is that at the end, because difficult to ask to someone to work on an assembly line, but if now you can ask to this engineer guy that they will be in charge of a group of robots, not of a group of workers, then the job starts to be more sexy, more interesting for this young guy, because they say, I will be like Captain Kirk inside the Star Trek. I will pilot my robot, and this is where we need to make to move the industry in this area, and this will benefit after for the people also.
Jean-Noel, you should stop to hire my people, because we have a factory in the border in South Poland, and it's very difficult. They go to Czech Republic, and the next day they get 30% or 40% more. So there is competition between those countries.
I mean, one of the interesting facts, trying to answer this, this lack of trained labor force, is that, interestingly enough, a lot of those Eastern European countries have been mirroring the vocational education system, which has been very successful. Some of you might know in Austria and in Germany, the vocational training of workers and apprenticeships, and these models have been copied in Eastern Europe. And if you look at some of the statistics, they lead now the lead tables in vocational training in the Czech Republic, which is, I guess, trying to answer that challenge. However, there is still, as you say, a significant shortage of labor in those countries.
And it will be worse in the next 3 years. For example, Czech Republic have analyzed the statistic, and in the next 3 years, there will be all a generation that will go in retirement. And if you look back 15 or 20 years ago, there was a very low natality rate. Then the output of the university is low, and in the same time you have a lot of people that are going to retirement. Then difficult time in front of us in
Czech. It may be a self-regulating issue, because one of my observations is the pension plans are not funded in those countries. So people, they go to retirement, but then they find out that they don't have money. So they go back to work. So it's a big problem, I think. It's the total unfunding of pensions in those countries. And I think it's a ticking bomb, you know. I mean, nobody speaks about that. The government spends a lot of money in different initiatives, but this one, I think they just don't see it. I mean, in my humble opinion. And I have seen that some people go to retirement and they say, what do you do the next month? I go back to work.
If you have to.
Yes, this is a real problem. So those are some issues, that will bring more workforce, but there are, I think, something still to be fixed, you know.
Yeah.
What do you think are the biggest challenges for all these Central Eastern European countries going forward, attracting investment and trying to catch up on that GDP gap?
Mm-hmm. I think the biggest challenge is, as I said before, a stable situation for education systems, so that we really can train skilled people in all these countries on the top level of European and worldwide know-how. Second, to create what you discussed now and brought in the discussion, social welfare systems based on pension funds. So the pension fund system, which we know from, Austria has a little bit different strategy here. It is more or less a state-owned system. But I think the example in the Western countries with also big private pension funds is important. And I think there is a lot of opportunity in all these countries involved. So the second big topic is, beside getting investments into companies, grow the companies, have strong partners from all the parts of the world here, is to create systems which in the future will really keep social welfare and peace, which is very important. You know that we have a situation in Europe where the people with smaller income are endangered. This is clear, yeah, from several reasons. And I think this must be one of the top topics for the politicians in our region to really cover up and to find systems where also the future is more or less saved for people if they want to retire. Otherwise, they can't retire. That's really true. And this is especially true as more you go to the east. In Russia, I think there is no security for anyone if he is not in a working age. This is really very crucial there. The third pillar, what we already discussed, is that this was part of my life. I tried 6 years, 7 years long to create a basis for capital markets around Austria. So Austria had a boom in the capital market in those years, 2000, 2007. Finally, 2008, it was stopped with a big crisis. And my idea was that all the countries, including the countries which we have discussed, should have a very strong own capital market. It is not the way that only one big stock exchange more or less merge with everyone. This was definitely not possible, and it will not be created in the next future, because you need for the smaller business very active local exchanges. And my idea was just to bring together around the neighborhood of Austria, including the Czech market, Hungarian market, and we started also with the Slovenian market, a group of exchanges which help to fund equity business in all the middle-sized and smaller companies. We are a continent here, so to say, in Central Europe, of smaller companies, of smaller enterprises. The huge companies are probably created now and will also come from all of these countries, but more or less the backbone of our economy, also in Austria, are small and medium companies. And for these, you need, medium is up to 300 million turnover, yeah? So you need for this a special capital market, which is not an American capital market or a big UK stock exchange in London. What we did is to bring in the best trading systems, and probably the leader here, we have two leaders in Europe, which is the French trading system and the German etc. system. And at least we could unify the markets with these systems. So the exchanges around Austria uses now mostly at the moment these German etc. systems, which allows them to have an access to the worldwide markets. You can trade every equity, every bond, every derivative over those systems, and I think this brought a strong integration. The same would be true if the French systems would be adopted for the region, but in this case it was the etc. system. So I think Czech, at the moment, the group of stock exchanges of Central Europe is only reduced now to Austria and Czech. Prague and Vienna are together in one holding of stock exchanges, but the others are partners around, also the Croatian market, the Slovenian, with the same systems, also Hungary. We had a big discussion to integrate, you know, the biggest country is of course Poland. I had years of discussion with the chairmen of the Polish Stock Exchange if we should join together. This was not possible from several reasons. It was not to say that the exchange should be in Vienna or Warsaw. This was not the reason, but of course the topics in Poland are very different to our topics, because one of the advantages of the Polish exchange is that the Polish institutional investors are more or less forced to invest in Poland, which is, I think, an advantage. In my opinion, it was an advantage, because Austrian investors in the 2000s did not invest in Austria. They invested everywhere, but not in Austria. And the big advantage of the years between 2000 and 2007 was that this market has been discovered from international investors. Yeah? The first one who really, so to say, found out that the markets in Austria and around are very important have been the English, Scottish and American investment funds. I have one fund which is really amazing. You might not know him. It's the Scottish Widows Fund in Edinburgh. And these are real entrepreneurs in fund management. And I'm really wondering what they have a huge know-how around the world. They invest, I think, 200 billion euros in the markets. And they have been very helpful as one of the most important investors from the very beginning for our markets here. And I can just tell you that it is important to go outside and find those big investors, and they are normally pension funds.
I think that it's true that one of the thing about the next challenge is what is missing in Central Europe is a kind of local champion. Some company you see in Czech Republic a lot of investment, but it's coming from foreign country. For example, Alibaba, Amazon, a lot of big investment, but there is no Czech company that is trying to expand in Europe, worldwide, and I don't see it in Central Europe. My company, for example, it's a Filipino company. They invest more than $100 million in Europe because they want to expand. They want to be a leader in their area, and they are not afraid to put some money in Europe in a country that is very far from them. But we in Europe, we need a little bit more that the young generation take more risk, and that the old generation fund this risk and not afraid to put money on the table in order that you try some new company, you fail, and like this we can build another ecosystem that will not need all this foreign investment in order to develop the Central Europe and also the Europe at the same time. Then, to be more risk taker. We Europeans, we are a little bit hesitated. The other country, they take risks. The Chinese, they come in Czech Republic, they invest. They don't speak Czech. They come, they invest, then they make some trade agreement with Czech Republic, and they put some money on the table. Why we are not able to do it? It's up to us here to little bit think about it, how to do it.
Well, coming back to what we talked about before, the question is maybe could Eastern Europe also become more of a hub for the startup economy? I mean, there's only one, I think, famous startup I can think of which comes out of Tallinn, which is Skype. But other than that, there was not a whole lot of a big new economy companies. Would that maybe be a solution for the region? I know Tallinn is trying to position itself, the Baltics are trying to position themselves as the most forward-thinking in e-government and trying to push that scene. Could that be a solution?
I think there is some idea, but we are missing the network, the infrastructure to support this idea. In Central Europe, in Czech, for example, there is a lot of local entrepreneurs, but very difficult for them to find funding. They have difficulty. There is not a lot of business angel. Then, when they have to fight for funding, it's a really few people that are able to help them.
In Poland, they are starting to realize the opportunity to do that, and for instance. I've noted that the Polish government, they start to make some special fund to participate in such startups or ventures and to have, let's say, public funding to help at very low interest rate or to help the startup of such things. So it happens. They do that like in other countries. It's a very common practice in France with Caisse des Dépôts, you know. And they are doing that, and I think it will give some result because those startups, they need funding, you know. And yes, the big investors, maybe they are forced to invest in the country, so maybe they invest not only in the big companies, but maybe also in the startups. So that maybe the effect, they will have more seed money, more, you know, venture things. So it will happen, but maybe a little bit longer because also, you have to look that from the perspective of a young engineer, you know. If you have the good young Polish or Czech engineer, Then he makes his PhD in US, and he will look at the paycheck, and he will say, okay, do I make a startup in Poland, or do I make something in Boston or in wherever? So you have to look at that this way, very practical. So the difference are still so high that to create the nucleus, it's maybe a little bit difficult. I don't know.
Very good. Well, I think since we have only about 10 minutes left, I did want to open up also the round for questions. Please, go ahead.
Thank you. I hope you all realize that we have a wonderful discussion on Eastern Europe without having any Eastern European speaker. So the title is Growth and Prosperity, right? Then the introduction was about the competitiveness of Eastern Europe because of cheap labor, 20% wages, average wages compared to the Austrian average. So this is, of course, a business perspective, I understand. But I hope you understand that this is the reason why you have problems with finding capable, trained labor in the region, because people are fed up with having 20% wage for the same job, for the same work. So my strategic question to you guys is the following. Maybe you are familiar with the latest research made by EBRD, the big bank. What they found, they checked German and French companies. And what they found that getting a larger share of the market is based on innovation and not on cost competitiveness. So how long are you guys in Western Europe going to compete with cheap labor in Eastern Europe?
I think I mentioned that we have a big R&D base, and the R&D is here to make innovation. It's exactly what we are doing. Yes, but I mean, we are not the enemy of our own interest. And I am not a French company, I am a Polish company. So what do? We invest in R&D cheaper, and we can develop more for the same money than the German company. And big German companies. Believe me, because we are competing, in, adhesives, sealants type of products, and we make much better products that are very successful in United States, in China, in Brazil, in Spain, in France, in Italy, developed in Poland, manufactured in Poland. So it's starting, But to have, cost advantage, we should not, look that negatively. It's an advantage. So we cannot be the enemy of our own interest.
I think that also.
I'm talking as a Polish company,
Be careful of the statistic. For example, in my company today, we say, you don't pay the worker. Last year, some company increased by 30% the wage of the worker in 1 year. They increased this year 16%. Today, when I'm looking for an engineer in Czech Republic, skilled engineer, I pay him exactly the same wage than a French engineer. I don't have choice, because if now I want to have someone to make the job, this is the law of the supply and demand. That I have to offer them the same wage. And then at the end, if you look at it like this, you can say, yeah, we are bad businessmen that are pushy. Yes, but 15 years. It's true that in 2002, when I arrived, it was I think the minimum wage was roughly at $150 by month. In comparison to France, it was crazy. But we invest a lot, because in comparison to France, it was more easy to make business, to organize a manufacture in Czech than in France. You cannot imagine if my time was focused only to develop the business, when in France my time was focused to spend my time to discuss with the union. 80% of my time, when I arrived in Czech Republic, 80% of my time was to focus to develop the business. Then after 10 years, today, the people in Czech Republic, really, to live in a country where we are at 3.6% of unemployment, people are happy. Yes, perhaps when they look at the wage of Germany, they say, I would like to have this wage. I have some guy that made this move. They go to Germany, and because they have some offer, but they come back because they realize that, okay, the wage is nice on the paper, but the cost of the living is very high. Then they come back. Then yes, for sure, at the beginning, each economy, you still a little bit the company need a little bit to use the cost advantage, but now after it's also to the country to make what is necessary in order to split from this business of only manufacturing and to split to high technology, high-end product. What happened today in China? They start with very low manual added value, and today they try to move. They try to move on the food chain. Then let's do the same. It's up to you. I don't have any personal problem to pay someone with a higher price if he produces something with a higher value.
Sorry, Stefan. The one I think argument one can have on this is if you think about that 2 hours car drive from here, Jaguar is spending 1.5 billion euros on a new car plant, is a positive effect for the region, for the workers there. And yes, you don't think it is? I think it will create significant jobs.
Sorry, all assembly line jobs doesn't have the country to catch up.
Right.
In the per capita capital is impossible because these are poorly paid assembly jobs which destroy the minds of the people.
That's not true. I'm sorry that I have my own guess on this. Of course, you're right that a lot of the Eastern European have to catch up with the social welfare, with the income, innovation, etc. That's clear. But if you look at the figures, Czech and Slovakia have really a fast growth with an income per capita at the moment of around 33,000 euro. Italy is 36,000 per capita. Yeah? France 42, Austria 48. Yeah? So this is really coming up in the last 10 years, and this is a big advantage for at least those countries. Yeah? Of course, others have not. And innovation is driven also through these companies. I know a lot of middle-sized Czech companies as automotive specialists with completely innovative methods. And they are invented and developed there. They are not from UK or from America. Yeah? So I understand your question, and it's definitely one of the most important tasks also for EBRD and EIB especially. You know, this new Juncker Fund, where innovation should be the center of activity in especially Central Europe. So I hope that this helps, these billions should help to increase innovation from these countries and not only importing innovation or big companies bringing in just to support their manufacturers on a low income level. I think this will develop. And just an example from Russia and other countries, one of the leading experts in new banking IT solutions, this is Turkey. Turkey is enormous advanced in full automatic banking, yeah, especially for retail sector. It's one of the banks of our group is the Sberbank, yeah, and they are extremely innovative. Yeah, they are really competing with all the countries and companies in the world. They are not less innovative than Google or what. The same is true for the activities in Russia. Our bank spends billions in the new banking system. So innovation is coming also from the East and not only from the West.
Just one, the per capita you are comparing is not relevant.
No,
GDP is a wrong
yes, of course,
indicator.
you can
because
discuss
it
long
the
about
profit.
economic
Wait
figures.
a minute, it includes the profit,
yeah,
which is repatriated. So this is why you cannot use it for comparing the...
Yeah, but it's a very important measurement, I would say.
taking the question. Is it on? Yes. Yeah. Manfred Mahler from B. Braun, Austria. We are running medical companies. We are having 2 factories in Hungary and Romania and 2 shared services in Romania and Bulgaria. And just a couple of observations and some of the challenges that go with it. And you asked a question about the biggest challenges we are having in Central Eastern Europe. My observation is that there's still a relatively high systemic corruption in Bulgaria, in Romania, also in Hungary. Yeah? Yet there are incredible opportunities coming from the politics system. Yeah? We are getting probably 50% subsidized in a factory we are building in Hungary, coming from cash subsidy and tax shields. Yeah? But we have a carousel of the political players going in and out, so it's very hard to get to know your partner there. Yeah? You have at the same time high human potential, at the same time brain drain. We are having this shared service in Temesvar, running very well, very good universities, but the good people are really leaving because of the reason the lady is mentioning. We have developed cities and rural areas which are 50 years back, and you wouldn't believe they're still driving oxen cars, and so on. Yeah. And then you have slow to horrible payment behaviors of public debtors. 50 kilometers from here, the government owes us money for 3 years. We're giving our products to the hospitals. We won't get paid for 3 years sometimes. So these are a set of opportunities, but also challenges. My question to you would be, do you observe similar issues in your industries, like what I just mentioned here?
There are certainly more specific issues in southern Eastern Europe, Romania, Bulgaria, that are not yet solved. In the other part of Eastern Europe, I don't see such things, I think it's much more stable. But the brain drain, we should forget the country dimension, but just look at the geography, because in fact, the population moves to cities in the world. The rate of urban population increase, and this is also the drain from the low density areas to the bigger density areas. And with a unified Europe with no borders, it can grow through borders. So in a country with very high differential in density, like in France, this is a phenomenon that has existed for years. You have desertic areas and very dense areas, and this is the same phenomenon that we see at European level. So of course, if a country sees that, they say, oh, our people are leaving. But we should, if we forget the national thing and we just look at the geographic thing, and those are movements of population that are made easier because of the unification of Europe, and this is something that it will be very difficult to go against with any policies, absolutely any policies, because this is just, I think in their projection in 10, 15 years, more than 80% of the world population is living in big cities. And this phenomenon continues because of different reasons, and despite internet.
I think that I agree with Jean-Noel that in Czech you don't have this kind of situation, that what we need, I think some people, we don't like it, but I am a Macron generation and say what we need is more Europe. Is that the more we integrate in Europe, the more all the countries have the same rule of law, the more we will start to decrease this kind of behavior that you see in this country. And it's sure that when we look at the situation, that some country we can be a little bit sad or not nervous about the situation, but myself, I'm 46 years old now. Young, yeah. I born in Africa, and the president of Africa, that is in my country in Africa, he started to be president when I was 10 years old, and he's since president. then you can imagine when I see the Europe, what happened in Czech Republic, how the things are moving step by step, you see that, okay, there is some progress. It's going slow. Yes, sure, people are not happy, but it's moving. You can imagine that you have a country when the guy that is the president is the guy that I saw when I was 10 years old. He has all the money in the country, everything. It's not what we have here in Europe. There's still, step by step, some rule of law that are building the foundation for the future. We need to be patient.
Well, I think the very meaning of stability. That's what it needs to be stable.
Yeah, be stable.
So I think here was a question. No?
Hello, Miorini. I'm working for Robert Bosch Automotive. I have a question to Mr. Zapotocky. You mentioned Ukraine, and traditionally we are supporting automotive business in Ukraine out of Moscow. Now, obviously, the political situation may be not supporting this strategically anymore. So, what would be your recommendation? And should we kind of support Ukraine more out of the West, or kind of wait until?
At the moment, Ukraine depends definitely completely on the West because of this unpleasant situation in the east of Ukraine. I had a very fascinating project in the year 2000-2003. To 2003, I was invited by the former government of Ukraine to create a strong capital market in Ukraine, so to create a strong exchange in Kiev, etc. And so I had some opportunity to look around the country. The problem is, as you already stated here, in several countries, unfortunately including Ukraine, that the legal certainty, so if you buy, for example, real estate, you don't know if you buy it and someone appears and says, oh, this was mine 50 years ago. Yeah? So as long as these countries are ruled by politicians who are, excuse me the expression, from the old nomenclatura, then it is not easy. Yeah? And we need a stable system of clear transparency rules, regulations which bring transparency. The real advantage for Austria in the years when I was on the exchange was to create a completely new regulation of transparency for the exchange. Yeah? You know that also Austria was behind before. And with the new rules, on and prime market rules, which are standard now in whole Europe, you can create more, how should I say, clear transparency and clear approach to investments, whatever. And as long that this is not given, also Ukraine will not develop. So at the moment we have a very unstable situation also in definitions of all these rules. And I hope, and if you ask about this, you know that the Russian banks, including Sberbank, is forced to leave the country. So there will be no Sberbank Ukraine probably in the future. Probably comes again in 10 years, but at the moment it's probably so. Ukraine depends very much from Western European policy.
Sylwia Siskoro-Mańczuk, Warsaw University of Technology. I think this is also the advantage that we have men with Westernian mindset running Eastern European companies. And this is also a challenge for inclusive growth, for sure, because we have different mindset in a different context, CE context. So I think you could also give us some surprises and also what you admire when you get to the CE mindset running companies. But the question is rather about something what was really difficult for our companies from CE countries at the beginning of 90s, that was negative country of origin effect. Jean-Marie mentioned that we have not so many local unicorns, local heroes. And in our book, we have mentioned 15 of them, but 15 it is much, not so much. But my question is, do you see still there is a negative effect of country of origin as far as the brand is concerned, looking at your products?
Negative.
Negative country of origin effect, because many companies has to buy, for example, brand, which is the name is rather German, to sell their products.
It's not because there is a premium on German product that it makes a negative, let's say, premium on Polish product, for instance. Germany has been, continuously for years developing very good engineering, building on their brand. You know, made in Germany is a very strong brand based on substance. It's not because you have, I pay more for Audi or BMW that I would underpay a Renault. I would pay Renault the right price. So these guys, they take extra money because they are good. It doesn't mean, and quite frankly, selling a Polish product, the Selena product, Titan brand, that we sell, I have never seen what you said, that there is a discount. And as long as the product is good, when you sell to professional, the product is good, they test it, it's fine, you know, and they pay a premium price. Already with our company, I don't see what you say. And there is, if you maintain the quality, people test it in professional market, it's absolutely not a problem. And you know, if you are, in Latin America or in USA, you say, it comes from Poland, where is it? In Europe, okay, no problem. Because, we have our little problems here, I'm sorry, but from outside Europe and outside Central Europe, the world is much bigger, and people say, oh, yes, Poland, where is it? In Europe, good product. That's enough. In 99% of the case, it works like that in the markets, People, they don't want to know if you are across this border or this other border. There is, a European trademark which is quite good, quite frankly. I can give you tons of examples. I don't know.
Maybe one more, because we're going to wrap it up so we can make it back to the main venue.
Yes, hello. I'm from Greece. I'm also in the medical technology field. We have some investments in Eastern Europe for manufacturing, but also distribution. So what I see, the last 10 years that we've been invested there, that the manufacturing, development of new products, and then exporting has been going incredibly well. But then when it comes to distribution, where we have also invested, it goes really slow. So the internal market of Romania and Bulgaria and Macedonia that we're invested in is going very slow, whereas our exports are doing great. So do you see this parity getting any closer, so the internal market getting better, or you're just focusing on exporting products from these countries?
No. For us, those countries, we make 25% of our business in Poland, 15 in Russia, and 15 in Eastern Europe. So we are present in all of these countries with our own subsidiaries, most of the case. So we don't export, and we manufacture in several of these countries, So we don't see it takes time to build a distribution network, but it's possible. I don't see a problem. And you have to do the right thing, to be a good business partner, to work for your customer. That's always the same rule, to create customers.
With these wise words, we unfortunately have to wrap it up. Thank you all for attending, and enjoy the rest of the conference.
Thank you.